Panda Anthem.
Ian, what's up?
Red Panda Anthem.
Red Panda, what's good?
Red Panda Anthem.
It's your boy.
Now you always say this to me, right? I always ask you, when's a good time to lock in your interest rate? And you always say now, because there's no guarantee that tomorrow it won't go up. So right now we got the 30-year fix at like 5.5% almost, right? Obviously, as the interest rates go up, it becomes less affordable for people to get these loans. And so, in your expertise and your experience in the field, how high do you think we can go with the interest rates in the next 12 to 16 months?
Oh, we're going to be 6.5% once the Fed raised the federal funds rate up another point this year. I mean, we're going to go probably 7% on the 30-year fix by the end of the year. Not even going to hold you guys up. So if you think it's expensive now,
and also,
wait, go ahead.
Real quick. The reason why these are the levels that interest rates were at in 03, 02, 05, when there was no quantitative easing. So when I told you guys last year, they're letting crypto, NFTs, stocks, real estate, used cars run up because they're going to say, hey, we gave you a chance, guys, to get money. You didn't take advantage of it. Now, there is a base level or median or moving average for where interest rates should be. Go look and see what they were when the Fed was not pumping money into the market and go back since 1929. The base rate should be 8.5%.
Oh, look, when I first came in the industry, I was refinancing people out of 10, 11% interest. And I came in the industry 2003, right? When I was refinancing people out of 10% rates and getting them into 7%, 8% rates. My first house that I ever purchased was a 7.25 on a 2-year arm, right? And then I refinanced that bad boy a year later into like a 6.25, and I was happy in a pig and slop, right? So having rates in that 5 to 7% on the 30-year fix, that's kind of normal, guys. It just hasn't been normal because the market crashed in 08, 09. And when President Obama's administration came in, they enacted, like Ian said, that QE. And then they started buying these bonds at a very high level. And we all got spoiled to interest rates being in the 4s, 3s. And then in the pandemic, they reactivated the program and now went into the 2s. So that's why I was so vocal, because I seen this firsthand, how the government back in 08, they did not want to save everyday Americans. They wanted to save the big banks. And that's why they came up with quantitative easing, was to save corporate and Wall Street, not America. But now, this time around was a health crisis. So they had no choice but to save everybody. And that's when they started bumping 40, 50, $80 billion a month into MBSs and treasuries. I said, oh my God, this is going to get crazy. Everybody needs to take advantage of this because it's not going to last long. And they can't keep printing this type of money and doing this. So now we're in a normal real estate economy. I've always said everybody's a top producer when money is cheap. Let's see what happens now when money is regular and you ain't got all these buyers out here in the market. So now you guys who've been over here, sitting here on the sidelines, even in the pandemic years, people were saying, we're going to wait. What the hell are you waiting for? Rate is 2.25. What is there to wait about? Right? But
interest rates was at 0. We thought we were going to go negative. And that's why I tell you guys, every market is tied together. Go look at what's on the balance sheet of big banks, real estate, now crypto. They actually said that crypto is the number one alternative investment. Futures, housing. When Blackstone and BlackRock began to buy like large communities at one time, I keep telling you guys, the number one job of every hedge fund and every bank is to make sure they make money in any market. That's why you have to invest in everything. That's why I'm not just a stock guy. That's why I also have a business and stock. And
you also have to look at real estate is the test of time, right? Real estate has been around when our grandparents was around. You know what I'm saying? So real estate is not going to never go anywhere. And you have to realize that no matter what happens, and this is why I'm vocal about, we as a community need to continue buy. Our home ownership rate is 42%, right? The Hispanic home ownership, and shout out to all my Hispanic brothers and sisters, in the past 10 years, they did their thing. They were lower than us 10 years ago. Now they're at a 51% home ownership rate. But our home ownership rate is less now than it was 10 years ago. That's a goddamn shame. So when you guys are listening to all these influencers, YouTubers, Instagrammers, TikToks telling us not to go and wait and this and the third, that shit don't apply to us. I'm sorry. It don't apply to us because our wealth, they're saying we're going to be broke in 20, 30 years. So for us, we need to buy real estate because real estate is a true wealth builder over the test of time. If the market goes up or down, guess what? You can still go outside and touch your property. If your stock account, your futures account, your options account goes negative, then guess what? You lose all your money. Game over. Sorry. But real estate.
And it's not marked to the market. So you're not seeing fluctuations. Like imagine if you saw like the ticker for your house every day.
So let me ask you a question.
To hold everything for 10 years. Go ahead.
That true, but when's the last time you seen rent go down?
Well, no, that's what I was gonna say. Also, is that preparing for a possible, economic downturn, recession, whatever you want to call it. One of these things that is going to benefit is landlords, because now, unfortunately, not only will people probably not be able to buy homes at the rate that they was buying because it's less money, they lost their job, they have less savings, and they're raising interest rates, and they're getting laid off. But also people will be losing their homes too for foreclosure. So you got to live somewhere. That's the number one rule in life, is that you have to live somewhere.
Yep.
So unless you're homeless, you have to live somewhere. So now you have to rent. So now what that does is that puts more renters on the market, supply and demand.
Yep.
So multifamily apartment buildings, these are things that, could potentially benefit from a downturn in the economy.
That's always an upmarket in something.
Yes.
And our job is to quickly tell you.
Again, look at all the institutional investors, right? We always talking about studying here on Market Money. Study what the biggest real estate players are doing. And that's the institutional guys. They're buying single family homes when everybody on TikTok and YouTube is saying, don't buy, there's a crash. Yeah. But why do you think BlackRock's still buying? Because they want
Who are the biggest institutional players, real quick, in the real estate space?
Oh, BlackRock, Buffett, you know what I'm saying? Just to name a few, right? These guys own probably half of America. And they're going to continue to buy all of the real estate because our people are just sitting here on the sidelines not buying nothing. And then we're going to complain and say, well, they're gentrifying the hood. They're kicking us all out. Well, we have the same opportunity to gentrify our own hoods. Right? Rent is going to go up. It's going to continue to go up, regardless of what anybody says, whether you like it or not. Landlords are not going to lower their price. It doesn't matter what happens in the housing market. And it's actually the housing market and interest rate increasing helps landlords more. Because now why? People are not going to be able to afford to buy, so you're going to have to come rent my apartment. Or you're going to have to come rent my house. You want to live in this nice A-rated school district? Guess what? We have availability. We have this 5-bedroom house. It's going to cost you $7,000 a month now. When you could have just bought it and it would have cost you $4,500. This is what's going to happen. Period, point blank. And there's nothing that no one can do about it. So what side of the fence do you want to be on, ladies and gentlemen? Do you want to pay somebody else's mortgage, or do you want to pay your own and get your tax benefits? Because real estate is a business, right? And you get tax benefits from it. So let's not discount, especially in our community, the opportunities that we have in front of us to build our wealth through real estate. I know we talk a lot of stocks and everything like that, but we can't treat real estate like the redheaded stepchild no more, because we have to put our earnings into real estate plays. We just have to.
There's 3 people that had a big impact on my life and who I modeled my career after. Warren Buffett was one of them. Everybody put in chat, how many doors is Berkshire Hathaway? That's why I would say master investor. Anybody in real estate, if you're looking to buy like commercial property or residential property and you want to know the best price to get in, let me flex. Let me put what the comps are. Top 5. I'll tell you the price of what to buy. Your job is to know where to buy every commodity on earth. Trust me, if Revolt go for sale, man, them boys can grab it. I know Diddy ain't gonna let it go because all the royalties on the back end, right? That's what I'm like, same with Urban One. That's why I put out the challenge, right? If we really want the culture to win, then why don't we pile into one company and take over that one company and own majority of it? And then even with the biggest real estate player in the space right now is still McDonald's, and now Apple is making a move there. Bill Gates owns the most farmland. The system is always the same. Go study the greats from 1920 back. Go watch the documentary, The Guys Who Built, The Men Who Built America. Your job is to own everything. James Pierpont Morgan bailed out the United States of America, and banking regulation came from one person bailing out the country. Tech investing as an angel, venture, real estate, stocks, crypto, NFT, long-term investing, short-term commodities. You have to own everything and quit selling grandma's house the week after she fucking
Please. I mean, I think you just touched on something good. Look at McDonald's, man. McDonald's the biggest real estate player that's out there, but they flip burgers. You know what I'm saying? But they're the biggest real estate player.
Of the franchise flip burgers.
Yeah.
McDonald's holds real estate.
And it's an incredible model, and we all have that opportunity. Look, if you're a first-time home buyer, if you have a business that needs a brick and mortar, look at mixed-use properties, right? You can buy a mixed-use property, which is a commercial property that has residential units attached to it. As long as it's less than 4 total units, you can use an FHA loan, 3.5% down, and you can buy a commercial property using an FHA loan. So
Derek Falcon told, not to cut you off, but Derek Falcon told him that was episode 11, arguably the greatest episode ever recorded, not only in Earn Your Leisure history, in podcast history.
No, Derek Falcon is the GOAT of all podcast episodes. Like, shout out to Homemade and Derek Falcon.
Shout out to Homemade. Shout out to Cloudy Donuts.
But MG's episode was episode 12, and that changed the game also. So that's a good combo because Derek is a restaurant owner. So if you understand about restaurants, you know about 90% of restaurants fail. It's an almost impossible business to be successful at. One of the reasons why restaurants fail is because they have a high overhead and they have an inconsistent cash revenue that comes in. So 1 month you might make $10,000, the next month you might make $100,000, the next month you might not make any money if it's a pandemic where restaurants are closed, but you still have to pay your staff, you still have to pay, your light bill, you still have to pay for food. So it's a very capital intensive industry. Mm-hmm. So one of his things is that he only opens up restaurants and mixed use properties. What is a mixed use property? It's very popular in the Northeast, like New York City and Baltimore, things of that nature, where you might have like 3 units where people are actually living up top, and then there's a restaurant on the bottom. BK9, our family in Brooklyn, they have that. So now he's saying that 60% of the expenses is probably covered by the rent. Mm-hmm. That's coming. So that takes a tremendous amount of pressure off him financially. So he doesn't have to come up with, a tremendous amount of money every single month, because now not only is he a restaurant owner, but he's a landlord owner. So what it is it's actually a real estate play. Mm-hmm. Now you couple that with MG's strategy with the FHA, which allows you to buy these properties at 3.5% down, if I'm not mistaken, Matt. Correct. So now you can get, let's say a $300,000 home, just saying that's like, that would be like $12,000, something like that, right?
Mm-hmm. Like a little bit less than 10 grand.
All right. So yeah. So whatever the price is, it allows you. And even if it's much higher, you're still putting 3.5% down. So 3.5% obviously is a lot lower than a traditional 20%. Mm-hmm. So, and then, from my understanding, correct me if I'm wrong, you have to live in an FHA property for 1 year to be compliant. So now, if you're a restaurant owner, you live in 1 unit for a year, and then you can actually move out, and then you can rent that unit, and then you can do an FHA again, correct?
Correct. So once you refinance out of that FHA and go into a conventional mortgage, then you can go ahead and use your FHA again for your next primary residence. And that could be a 4 unit, that could be a 3 unit, a duplex. It's kind of like the BRRRR strategy, that buy, renovate, refi, strategy that investors use. It's the same thing for just the everyday homeowner to build their wealth by house hacking. And on buying mixed use properties, it's a good play. Also, I want people to focus on, so we spoke about mixed use, we spoke about accessory dwelling units, which is a good play. We have to look at other opportunities, like there's a housing shortage, right? And there's going to be a housing shortage. I think that the reports I've been reading, we need about 5 million homes to catch up with the demand, because, we're growing. The population is just growing and growing and growing. So you got to start now looking into construction, right? A lot of old properties, maybe you can't find land, but maybe you find a property that's in an area where it's zoned, and you find out the zoning where maybe you can turn that single family into a multifamily, or you can turn that single family into a new ground up construction. These are the opportunities, because the buyers that are coming up, they want brand new, They want, less maintenance, and new construction is going to give it to you. So we have to start looking into these things as a community and stop trying to go like the old ways. Look at these new opportunities, because that's where the money is going to be made. Development is not going to go nowhere. We need to build more houses, right? Mm-hmm. So guys, learn how to develop, learn about construction loans, learn about these things. So now you can get yourself in the game, because these are fundamental steps that you can take. You don't need to go out here and buy $100 if you're not ready to. You can take your baby steps, because real estate is a long-term goal, a long-term play. You can look up 10 years from now and be wealthy off of real estate, y'all.
And also to back your point, so not only does Berkshire own, so I still want you guys to put in chat, how many doors does Berkshire own? They also own the real estate firm that is the biggest in the country, Home Services of America. They did 346,000 transactions. So not only do they own the doors, they own the biggest company in real estate, while Buffett is known for stocks.
But you also who the number one developer of mobile homes in America is?
Tell him.
Warren Buffett's company.
Y'all don't have to listen to me.
Diversify your portfolio.
Even when people like, yo, you was tripping. Last week was about my passion and telling y'all, man, if you're black, you only have 2 years if you're not up.
24 months.
That's it.
Yeah.
Don't follow what I say. Follow what the top 5 governments, top 5 countries, and top 5 richest people do. How do you get the money? I know somebody gonna say that. Partnership. If you are of integrity and you're trustworthy, if you go to these meetups that we have, you'll be able to find partnership. And I always ask you guys, if you guys have a great idea, why don't you ask us to partner with you? Collaboration is the way. And so last week, I'm not going to yell again, because if you guys choose not to listen, cool. I'm going to focus on the ones that do. So for those of you that are focused on getting doors and long-term investing, and you can short-term invest and long-term and build a business, follow what we're telling you. I'm gonna be real. Market Mondays is more valuable than the NBA, because they don't.
It's not even close.
They don't even teach you how to invest in the market.
And shout out to the league.
Shout out to the league.
I love the league. I love the league.
Yep.
I love the league. But I mean, you can't compare education with entertainment.
This that Red Panda anthem. Ian, what's up? This that Red Panda anthem. Red Panda, what's good? Red Panda anthem. Whole clip going up. I know they can't stand it.